Hey, YouTube. So I want to go over the one trade that I took today and kind of share with you why this trade failed. Um, Basically, market structure is critically important, but also what's critically important is price action. You have to pay attention to when the price fails to take a swing low. In this case, that's what happened. So I saw the market structure shift here. A body was placed on that swing low. Price moved back up, moved back down. Then price failed to take this swing low. If price took this swing low, then that would have been a signal that price wants to continue to move down. That's price action. I got faked out is what happened. And as you can see, I'm in the pullback area because price pulled back to here. And really and truly, the zone was really here. That was the correct zone. And we traded out of the zone back into it. And I thought we were going to continue down. But when price did not confirm that it wanted to move down with this fail to take, that's a signal that price wants to move up. Now, the risk management aspect of this was also not very good. Once price moved past this high here, and if you drop down on a lower time frame, you might have seen a body placed on that swing high. Then the trade is invalid. I mean, the swing high is actually right here. That's a very significant swing high. But this swing high, once this swing high was validated, that's a warning. Then this swing high is validated. Taken out. That's basically telling you this trade is shot. At the very worst, and that would have been an $18 stop. Now my total daily loss limit is $70. So that would have given me plenty of room to try another trade. But I really wasn't aggressive with my risk management. And that definitely needs to improve. At the very worst, when price left the zone here, that is a surefire sign that this trade was invalid. That would have been $40. That would have left me $30 to at least try to see if I can get back in the game. But I let the trade go all the way up to this swing high when it took me out, and that hit my daily loss limit. So that was the trade of the day. Price action, market structure kind of had a feel for it. Price action didn't really have a good feel for it. Let's take a look at where we're at. In terms of this trade, the things that I missed out on were risk management and price action. So those are the reasons why this trade, this was not a successful trade. It could have been, taking a loss is not a problem, but when you take a bigger loss than you should have, that's a problem. So that's the situation there. Now let's look at the scorecard for the day. This one trade, one contract, those are all good. In terms of mindset and market structure, I give myself a dub. In terms of risk management and price action, not so good. So overall for the day, I gave myself a draw. Misread price action, it happens. Just got to move on. Let's look at the accounts. So here we are at the accounts. Had I been better with risk management in the beginning, I probably would not have as much in the way of these struggles, and I would still have a lot of capital left. but I let this downturn of drawdown just get deeper and deeper. So that is not good. It's not over yet, but it's not looking great. So what I need to do now is, what's going to give me my best chance of getting out of this hole? I'm going to have to reset my drawdown limit, reduce it from 70 to 55. So let's take a look at the accounts. If I reduce my drawdown, daily drawdown to $55, then that'll give me 5 chances before the account is blown to try to nose up. So that's what I'm going to try to do, is just be careful. As soon as I hit the $55, I'm done for the day. But I think with 5 chances, hopefully I'll be able to swing out of this and pull the nose up a little bit. I want to recap real quick what I'm going to incorporate. My routine before I trade is start out with a mindset journal. That looks like this. Basically, it's a verbalization of where I think my head is at, and then do my analysis, starting from the 4-hour time frame. Quick look at the day, but mostly 4-hour time frame is what I'm going to base my higher time frame on, since I'm trading on the 1-minute time frame. Do a market structure analysis. Is the market structure showing me that I'm in a trend, or is it showing me that I'm in a range? And see if I can determine when the best time to get involved is. And then I'm incorporating in my trades, basically on a scale of 1 to 5, where I think I'm at. Self-awareness is really critically important. And then lastly, I have the green light to take a trade or stay out, based on all of this information here. All right, that is the recap for today. On to tomorrow. There's still Thursday and Friday to try to make things turn around.